Now let's get to our conversation. Wayne Kaufman is here, Chief Market Analyst, Phoenix Financial Services. Good to see you, Wayne. I'm glad you're on with us. So what's your general sense of things these days? I mean, obviously we're a headline-driven market, and we're somehow tied into anything vaccine or China. But what's the big picture here? How are you feeling?
Well, first of all, great to see you. Thank you for having me again. I'm bullish long term. I've been bullish for a very long time. We're in a rocky time period now. We did get over bullish. Okay, there was some obvious over bullish sentiment. We overshot a little bit to the upside. Now we're pulling back. Might be a little bit more of that to go. New lows are expanding. Options traders, again, have been over bullish. So we need to work some of that off. And we're in a tough time of the year seasonally, September, October. We're ahead of the election, and we're worried about COVID coming back. We're going to have extreme drama here as the election unfolds. And I'm worried most of all, believe it or not, about a contested election afterwards. That's my single biggest worry. So the good news is that after coronavirus, the economy will be very lean and mean, and the weak operators won't survive. The strong will be left. It'll be, it'll be a great economy once again.
Well, we've seen some new things emerge, and they're doing very well as a result of the new way of life. Tell me about Qualcomm, a big name in 5G for you that you like, huh?
Yeah, Qualcomm is really one of my favorites. Semiconductor company, telecom equipment, an enormous 5G beneficiary, a tremendous history of beating earnings estimates. Last quarter, 86 cents versus a 70-cent estimate. That's 23 quarters in a row that they've beaten. They have licensing agreements with every major handset maker, and I think the stock's very undervalued. And they have even a better than 2% dividend, so a lot to like with Qualcomm.
Yeah. Another name on your radar is Sherwin Williams. It's interesting. All things that have to do with the home builders, housing, furnishing seem to be doing very well. Because, for example, RH today, we talked about that with George Sillis, is up 22% for restoration hardware, right? We talked about Trex, and we've had the CEO here, doing decking in your backyard. That has been a real winner. And so many of the other housing type names. Why Sherwin Williams out of so many names that are related to our home?
Well, I could have picked a lot of them. You know a lot of them. Sherwin Williams, they smashed the earnings their last quarter. They did $7.10 versus a $5.75 estimate, and it's of the stocks I gave you guys for today. It's the boring one. It's just really easy. Paints and coating, and they're knocking the cover off the ball with their earnings, and that's what we look for. And the chart is beautiful. Stock is breaking out to new highs, and I think it's a great stock for the current environment with housing and all the things that you've mentioned.
Tell me about, I love your explanations. It's tough to pick sometimes, especially when you have a group that you like a lot. The others that you have are Trade Desk and Guardant Health. Give me a little bit on each one of those as names that we should have. These are some long-term plays, right? You buy them now and you hold them for some time.
I think Guardant more so. Guardant is the leading company in liquid biopsies for cancer detection. And it's really a very important company. They break down the DNA of the tumors to allow targeted drugs to go to patients, really specific drugs for specific patients. They also allow drug companies to develop drugs based on the DNA of the tumors. And it's much faster to diagnose with liquid biopsy compared to tissue. Plus, for patients who have had cancer and are in remission, how do they know whether or not they're getting it again? And you can't really do that with a tissue biopsy. Blood is the best way to do it. The Trade Desk is an amazing company. They are the leader in digital advertising technology. And one of the things that COVID has accelerated is the move towards streaming. And streaming is so important. Typical traditional linear TV is going away. Everybody wants TV on demand. And the advertising has to go along with that. And the Trade Desk has tremendous numbers, Last quarter, they did 92 cents versus 17-cent estimate. They have a platform. They get paid by the advertisers for using the platform, and then they get a percentage of the advertising money. And there's so many advantages for the advertisers. They don't have to make these huge upfront purchases, which traditionally they've had to make. And a lot of them got hurt because once sports got canceled, that was a big deal for them. It allows them to control the ads. Like they found that the single thing that consumers hate the most is repetitive advertising. You know, we all wonder sometimes, why do we see the same ad 2 or 3 times in a row? They can eliminate that for the advertisers. It's really in the advertisers' control. There's so many advantages. It goes right to their bottom line. It's a great return on investment. And this company, I think, is going to be very well known in the future.
Can you give me 10 seconds on the high flyers, the hot stocks? Would you chase them? I mean, do you like them? Names like Tesla and Zoom and Peloton and DocuSign and even Apple. I mean, I know Apple's come back a little bit, but would you like all these, or you'd stay away from these?
As a technician, I want to trade them technically. You know, you guys were talking about Peloton. Everything that was said before is completely true. All the equipment providers are very sold out. It's very easy research. Just go to their websites and you'll see the delivery times that they tell you, and frequently they end up moving those back. So, but in terms of the high flyers, some of them are still stretched, but some of them, you know, the way you want to do it is if you want to piece into them. I still think that the big cap tech stocks are phenomenal companies. This is not the year 2000 through 2002, which I lived through, and I remember that very, very well. This is
and big cap tech means what?
Amazon,
what kind of names
Facebook,
are you talking about when you say big?
Microsoft, Google, Apple. These companies have all the money in the world. They've got enormous research and development budgets. Amazon's research and development budget is over 10% of the total R&D of the
All right,
S&P.
so you like those.
I still like them. You want to look at the charts for entry points, but yes, I still like them.
All right. Wayne, great conversation. As always, thanks for being with us. Wayne Kaufman,
For having
Chief Market Analyst, Phoenix Financial Services.